Remember, happy early Turkey Day. It's Thanksgiving week. We're going to have a short week for trading, but the markets will still be open. So let's talk about a little bit of everything. Let's get started. Risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. We're trading stocks, options, futures, forex, cryptos, whatever asset class. You know the deal. If you're following me out there on social media, make sure it's the real me. YouTube.com/Chris Pulver Mondays. And this week, not Friday, I'll be doing a video update more than likely, as opposed to a live session because I'll be traveling. But Twitter at Real Chris Pulver, Facebook, Instagram. I run this session, multiple streams, stuff like that. But at Real Chris Pulver is the real handle. If you get something that doesn't show that handle or profile, and it's some message that looks like me, it's not me. Okay. So just make sure you report all the suspicious activities and scammers because they be thirsty. All right, let's get into the charts. Nice to see everybody. I have the SPY up this morning. We're looking at a pre-market about $1.25 lower. We're going to see what this market's made of for any type of holiday drift. Couple of big levels to watch for this week. I will set some chart alarms. I think these are important to note. 385. Now we bounced off 390 last week, which is the line of the sand we talked about in the equities on demand trading room. This previous break of 390 became resistance, became support. Interesting little jump, right? So we broke back above, we retested the weekly pivot and hopped off of that. So we're going to see if we can hold this 390 to 385 window. So let me go ahead and make a note here. 385 to 390 key support. I'll put that on the chart. Right? So keep that in mind this week. I have a chart alarm set at 385. I have a chart alarm set at the highs at 402. Okay? So we're going to see if there's a little bit of a holiday drift. Maybe the Santa Claus rally comes and kicks in a little bit early. We will find out. Volatility index is trading around 23.83. One of the most successful strategies this year has been if the VIX has been down to 20 or lower, you just sell the SPY. And anytime it's above 30, you buy the SPY. And that literally this year has produced over 25% gains. So I'm curious if we have a holiday rally and the markets rally higher, if the VIX will continue to push a little bit lower. Everything is pretty dormant and quiet at the moment with the Fed not until the 14th of December for the all-important rate hike. Is it going to be 50 basis points? Will it be 75? Is the Fed language going to change at all? Interesting podcast I caught up on this weekend. In Search of Green Marbles, Jordy Visser. He had one talking about the regime shift, and he's been pretty bullish all year, and he's really he's fundamentally denied that we're going to have a recession. He thinks earnings will still be pretty solid. Nominal GDP will be solid. Jobs will be solid. So all these things that tend to point to a recession, he's not buying it. So to what extent do the bulls rally? He's not really sure. He just think that we'll have lower volatility, but not necessarily a full-on recession that the market's going to try to price in. Again, we'll wait and see. But for trading this week, like I said, short holiday week with Monday, Tuesday sessions for me, and then Wednesday I'll be traveling. But I will do video updates for the Flex Trading Room. Probably at least one video update. Maybe it's coming end of the week, or I'll just keep everyone abreast of any alerts and stuff in Telegram. But what I expect to see in the markets would be a drift of some sort that maybe kicks off and gives us some trajectory. And let's make sure that if we see breakouts, we try to follow along on those breakouts, because what tends to happen during holiday trading is breakouts establish a little bit of a trend and there's an absent opposite party. So if you see a bullish breakout, the bears tend to be absent and the market will drift higher in a bullish trend. All right. So anyway, that's what I'm looking for this week. Let's take a look at the major crosses. The DXY pulling back to this weekly pivot as we thought it would do last week, but it's finishing that move today. Again, I'm curious if this pullback is just a pullback, right? So we have our big flush down into the 200 EMA. We pulled back to the weekly pivot. I'm going to look to see, let me get my drawing tool up here. I'm going to look to see if we have a pullback towards this weekly pivot and then a move that starts to get faded back down. Okay. So before we jump into this, couple things. Let's do a little bit of maintenance here. Let me jump into the YouTube channel and say hi to everybody. If you're watching on Facebook, watching on Twitter, hello everybody. Bit of maintenance here. All right. Who's in the house today? Brad, man, you're always first. You're always first in the comment chat. I love it. You just said I don't plan on being first. There you go. You are. It's all right. Own it, man. Own it. All right, David, good morning. Sterling, good morning. Gary, good morning. Tim, Ruthann, Chris, Daniel, what's happening? Oh my gosh, Daniel just reminded me. All right, dude, I'm a terrible. I'm a terrible listener to myself. Well, you know that it was a crazy busy week last week. I literally on Friday after I finished up my final class, it was like 3 p.m., 3:30 p.m. or something like that Eastern time, and I literally just went right to my room and went to sleep. I was so tired. I just took like a 2 hour, 3 hour power nap, and I needed it. I was exhausted. So anyway, I will get to it as I said. All right, Ever, good morning. Andrew, good morning. Craig, good morning. Donna, what's happening? How are you? Bill, good morning. Janine, good morning. All right, nice to see everybody. Um, One thing I wanted to mention, so this is the little early bird special for those of you that use TradingView. They have an awesome Black Friday sale. I tend to do this every year. I just did it this morning before I started the live session. I just extended my premium TradingView for the next year and a half. Well, I guess 13 months, not year and a half. Obviously, I can do math. But 60% off. I do have a link for it if interested. Let me see if I can find it here. So this link I will copy, and in the YouTube chat, let me see if I can log in here. So switch account, log me in. There we go. Okay, so this is a TradingView Black Friday sale. So right there's a link for it. That's an affiliate link for me. So if you want to sign up under me, that'd be awesome. Just to give me a little credit for TradingView if you use the platform. Obviously, I'm referencing this for stocks and futures and everything else that I like to kind of check on the big symbols and have my app and everything. So TradingView is awesome. And then of course we have everything with market traders with Smart Trader, which we have our proprietary systems and custom indicators and all that good stuff. But I love these sales. I do it every year, and I think I'm extended out probably for the next 2 to 3 years after just kind of bulking up with some of these Black Friday specials. So it's a good deal. What's this say here? Oh, yeah. Okay. Got it, James. All right. I'll be after that in a second. Let's see here. Hey, Trading Battle. What's up? How you guys doing? Party on the YouTube channel. Thanks for being here. Happy early Thanksgiving to you and the team. All right, let's get to the chart. So here's the DXY. Like I said, I'm looking for the dollar index to see, do we have our flush down, our pullback? Do we start to fade this move going into the holidays? The way that I see this coming to fruition is if we're going to see a stock market rally. Okay, that's not a very good arrow. But if we start to see a stock market rally to the upside, I would suspect that up on the stock market means down on the dollar index, as we saw with this move. The dollar index going down was how we rallied off of those September CPI lows, right? Those September, October CPI lows. Actually, it was October. I forgot we're almost a month away from that CPI dip. But the S&P has rallied almost 15% from that low in October. All right. So do we hang here like stalling at 400? Do we not break below 85? Do we have like sideways chop for the holidays? And then it'd be really boring to see the holiday move like that, right? Where nothing breaks higher than 400, nothing breaks below 385, and we just sit for 3 weeks waiting for the Fed December 14th. That would be super annoying. So hopefully that's not the case. Hopefully we still have this Q4 rally. We have some leverage and reallocation for the big money out there that's been sitting on the sidelines. And we're going to see, earnings has survived. Like this week, I think there's only 85 companies or so that are providing earnings. So as out of thousands of companies, I mean, 82 are left, and we survived the retail glut from earnings. I mean, I know Target missed, but Walmart was fine. I know Amazon's cutting jobs, but for the most part, the market was fairly maintained because they're not, we don't have like a massive job layoff. It's mostly in tech, but tech's also been on the decline for the last year. Okay, all right. Thanks. Jason, what's up, man? How are you? So anyway, if the dollar fades off that weekly pivot, good. I'd like to see that fade on the dollar and a rally in the equities market. And we'll see if that is a nice little correlation for us to play. Oil was a pretty big story last week. Okay. I'm not quite sure, other than now we have some technical alignments here. I mean, clearly after this high to low, lower high to lower low in oil, we hit some corrective symmetry here. We still have this big support area back between $70 and $65. We have a yearly pivot sitting at $70. There is something going on here where, I think everyone that was on the bandwagon of, oil prices being at $150 to $200, I think we're clearly seeing that's not the case. What this leads me to believe with price action is that we're probably going to settle in somewhere between, now maybe around $80, and we might have this range from $80 to $100. And if that is the case, that's actually a healthy range where we can kind of avoid the crisis of energy, energy crisis shock. Everyone is so worried that like we didn't make this, it was going to be this, high to low, lower high to lower low, then everyone is loading up here for this crazy big energy crisis. It hasn't happened. And again, I'm just putting the reality out there, like maybe this rally, maybe this correction, maybe this market finds really nice equilibrium in supply and demand between 80 and $100. Okay, I don't think 80 and $100 is going to be really an inflation scare like everyone thought. I mean, obviously if inflation was going to spike up again, we'd have higher oil prices, and that was again the looming crisis. But if we have 80 to $100, I think that is healthy supply and demand where oil can coexist with the world, and we don't have energy and fuel prices crazy high, and maybe that again allows the peak inflation numbers to keep sticking. Interesting fact. So the first half of 2022, our inflation was like 11%. Okay, this is just U.S. inflation, but the first half of the year was 11%. For the second half of the year, which were 5 out of 6 months in the second half of the year, 3%. So again, you just take the average, right? Take the average. You have 11% first half, 3% second half, and we just had a print last week or last week or the week before at 7.7. So we're definitely seeing the signs and the fundamental signs of peak inflation. And there's a reality here. I'm not saying that it's forever coming down, but with the improvement in inflation data, so we have CPI data improving, PPI data improving, the overall core PCE is improving, and those prints are showing that maybe we can find a way to kind of get back to it. It's going to take maybe 6 to 12 months, maybe another year and a half to get inflation numbers down. If the Fed is truly coming after 2%, it's going to be a long ways away. If they're willing to say that our federal funds rate will be higher than the inflation data, then maybe the Fed can still be happy and satisfied around, if PCE CPI data is coming in at 3%, 2.5 to 3%. Maybe there's a slight buffer where they'll allow it to be a certain level and not have to be crazy tight on monetary policy. So again, these are all the fundamental stuff that's just, it drove the market crazy this year, drove us crazy because we've never had to check the CME Fed Watch tool as much as we did this year. So it's pretty crazy. But I just thought oil was a big story from last week because we had a big drop. I mean, from $90 all the way down to 78 and change, and it doesn't look like we're stopping. This 200 EMA is now holding. I was looking at this as a potential head and shoulders pattern if we're going to have the bulls hold this level, but they are not. So either this is going to form some type of descending triangle. If this level of support holds, we might have high, low, lower high, lower low, something like this. Okay, that might end up looking like well, it could be two things. I think this is probably a bit of a falling wedge that pulls back into here. But if I'm making a projection on oil, I think we're going to find a way to, maybe hold support around $75 to $80, have resistance between $95 and $100, and that's going to be the new levels. Lower volatility, supply and demand on oil, and probably that translates into the overall markets. Lower volatility, we're not going to have crazy runs. We'll have some areas to buy super low and take some profits. But I think going into 2023, traders are going to have to be very active. You want to be active. You want to buy low and protect your profits. Buy low, protect your profits. Repeat, repeat, repeat. There's going to be a lot of that transactional trading, I think, going on in 2023. So I'm certainly not of the philosophy of buying and holding going into 2023. But that's just me. But I think that also allows me to be a little bit more nimble and try to, play what's moving. Okay. All right. Interesting. Dan says down to the pump. Yeah, those gas prices. Let's go to AAA gas prices. There should be an easy, AAA gas prices. So I think the last time I looked at this, it was 390. Now it's 366. So we're definitely coming down quite a bit national average wise. Let me see if it shows current average yesterday, week ago, month ago. Check this out. So, I think this is funny. I just want to ask, how many people still get regular gas in their cars? Regular. Because I feel like if you have a car that's, not 10 years old, most people are getting mid or premium, right? Most people. So, I mean, this is essentially what most people are paying in gas, right? But I'm just curious, I haven't even noticed. I mean, I'm trying not to drive a lot. I logged about, I don't know, 4,000 miles in a month. So I'm giving my car a little breather. But yeah, it's slipped down like sub $4 out in this area for premium, which is pretty decent. Well, I take that back. Yeah, that's $3.99 for premium. Whatever, that's doable. And then our crazy highs were June of this year. Regular unleaded 501, diesel 581. Diesel still pretty high. We're still having some like diesel shortages. But yes, it's coming down. Gas at the pump. We saw the summer rally in July was pretty much based on this. So we saw the gas at the pump prices coming down. Oil was dipping, and so the markets rallied a little bit. Yeah. All right. Janine says regular, regular. All right, good. It's not nothing. All right, I was just curious. But I love how convenient it is for new cars to be like, oh yeah, totally put at least minimum 89 or minimum 91 or I saw this too. 91 is typically like your premium, but I saw a lot of 93s like premium plus and blah blah blah. It's like, are you just trying to get an extra like 30-40 cents on me? So that is why I get my gas at Costco. You can typically save like 50 cents. But Costco costs you enough money elsewhere. I'm sure they're making it up on their margins for membership / everything else that you get at that store. Am I right? All right. Anyway, let's move on. Bitcoin, take a look. Bitcoin trading at 16,179. I saw the lows over the weekend. We're back to 15K. I'm sure there's some eager buyers out there that are like, please, please, please go up. Don't be surprised if we just continue to flush lower. I'm just saying, might flush a little bit lower, right? 10,500. I mean, I'm looking at a key support level at 10K. So we're hanging out right around mining costs, which is around 15,000. Previous high back here at 21.5, which was right below the fall. And that was definitely not what I expected. I mean, to see us have this, really a falling wedge, holding this support level as long as we did, have this break to the upside, I was like, this is looking pretty promising. And then FTX happened. So a big blemish on the whole industry. I mean, there was a huge wipeout in market cap on just crypto in general. I am, legitimately nervous for people out there holding cryptos on exchanges. I'm worried about the solvency of some of these custodians. I think that Coinbase might be the last one to fall. I hope they don't. Obviously, I hope they have they've got partnerships with BlackRock and other major firms. But I also don't know if that's you know going to allow everyone to be safe. I hope it is, right? I hope that everything's flushed out. The frauds have been exposed. There might be more, but I hope it's not just getting started, right? I mean, that'd be a huge letdown. But and I also don't abide by the philosophy. I've seen this on Twitter a lot, like, oh, look at Charlie Munger and watch Warren Buffett, like they're celebrating the demise of crypto. It's like, well, they're also 90 years old and they probably would never trade it anyway. So if there's anything in the next 5 or 10 years that still gets Bitcoin back up to 60,000 or back up to 100,000 or back up to whatever thousand, good. It's still risk capital. It's still an asymmetrical trading opportunity, so I'm willing to take it. But anyway, we'll see how it shakes out. I'm just saying, be careful. It's still risk capital. Okay. All right. Good stuff. So that's Bitcoin. Ethereum still holding pretty steady above the 1K mark. We're trading 1136. Currency wise for this week, like I said, short trading week, but I'm still looking for some movement here. Aussie, CAD, we'll start there. Just kind of flip through some currencies the next 5 or 10 minutes. Here's what we're looking at today. Fairly contained on the vertical axis. JPY is making a little comeback to the upside. I would like to see, like I said, with that dollar coming back to the weekly pivot, if we can hold this high and we start pushing back down in the dollar, bring the dollar back to baseline, see if the JPY, the Aussie, the euro can hold. It's pretty steady. I did get limited out overnight on a little scalp for the dollar Swiss. Traders with me last week that did hit profit. This was, I put a profit at 9,600. So dollar Swiss is trading at 95.76. I put it right at that weekly pivot, which was 96, and to the pip. Pretty happy with that right there. Smack. So I actually put my limit at 95.95. 5 pips off that, and we got limited out. So nice little trade on that dollar Swiss, and I'm still looking at this, 96.20 pocket, and eventually, I firmly believe that at some point we'll go back to 98 on the dollar Swiss. But like I said, I'd like to see this flush down, pull back, go down lower, buy this thing at 9,000, this 91 to 9,000 area, and then take this all the way back up towards this area of resistance. So if we can get a major support on the dollar Swiss, allow the dollar to flush a little bit lower, and then we're going to take it back up to resistance. Okay. So I'm still looking to level in on the dollar Swiss, and but I'm pretty happy I got limited out. That's a nice little scalper Rooney for a non-FIFO profit. Let's see here. FTX McKinley, you're clearly joking, right? Please tell me you're joking. I mean, you might as well just try to track down Sam Bankman-Fried, SBF, right? Try to track him down in wherever the heck he is, in Thailand or whatever, and just have him give you like bags of money that he stole. So yeah, I'm staying that. Literally, I took all of my cryptos when this whole thing was imploding on FTX and it was bringing the crypto market down. I took the other like 8 or 9 altcoins that I was trading and I just rolled everything to Bitcoin. So I even cashed in on Ethereum. Ethereum is still holding fine. I rolled my Ethereum into Bitcoin. The only thing I have right now is about 85% is my Bitcoin and 15% is Ripple because I can't offload my Ripple at this time. But that's it. So I'm pro Bitcoin, I guess. That's pretty much the only thing I'm hanging on to. So, all right, let's get to some currencies. Aussie Swiss, nice little limit. Aussie CAD, we're going to see if we can get a break above these highs. I am quite bullish on the Aussie CAD if we break these highs. So, trades this week for Flex Trading Room, we get a nice little breakout. We look for a master flex to the upside. By the way, speaking of master flex, I want to show everybody this. So, traders that were with me in my class on Friday, we had a Masterflex class. It was class number 3. The student chat is blowing up over the weekend, which I absolutely love. Thanks a lot for everyone participating and just helping each other out. But I did get those tests done as I promised, and we're going to talk about them in Flex this week. So I know that I don't have a live session on Friday with everybody, but we're going to talk about this in detail tomorrow. But basically, I took a 5K account and turned it into roughly 15 and change. Now that's a 200% increase over a 11-month period. I did it from January to now. I think the data I stopped the tick data around the I think I stopped it at the 11th because I've been running this test for the last week. Okay, but I'm running this full auto, both directions on a 30-minute time frame. Nice little flow, good grid trading, good equity management, and this thing did an awesome job. So drawdown again. It's a 5K account, so the drawdown's a little bit higher. If I increase this to let's say a 10K account, look at the distribution or the return rather. For a drawdown of, let's say I put a 10K account in here, that cuts the drawdown in half. This would be a 15% drawdown for a return of 102%. I would gladly take a 15% drawdown for 102% return. Just cut this in half, right? And all I'm doing is trading micro lots, so it doesn't take a lot of money to trade this account. Just takes good equity management and a good system. So pretty exciting stuff. That's Masterflex. If anybody sees this interested, I've got it for sale. Pulverreport.com should have the link for it. If not, if you're interested, you can ask me, leave me a comment for today's video. If you're watching the recording, you're interested, I've got a link for it if you want to check it out. I also have a kind of a demo video if you'd like to see it. Let me see if I can post that here in the chat. Give me like 2 minutes. Not even that. I'm just going to find the video. I have like a little showcase video for everybody if you'd like to see it. I've shared this before, but let me see if I can find it here. So this is Master Flex Showcase. I think that's what it's called. And I found it. Close catapult. All right, let me get that link for everybody. I'll just post that in the chat directly. Distribution. And there we go. Okay, this is a Master Flex showcase video. All right, there's a link. Oh, it took away. All right, the description is too long. There we go. That should work. That should be a hyperlink that takes you there. Okay, again, you can check it out to the session. All right, so really quickly, Aussie CAD. We break above this high. That price is around 9,000. We break 9,000. I want to be long Aussie CAD. Aussie Swiss. We break above 64.50. I want to be long in Aussie Swiss. Aussie yen, stay out of it. We're in a range right now. We're looking for breakout. This is another one that could be a good one to watch for the holidays, right? We get a breakout to the south, look for that to follow. We get a breakout to the north, look for that to follow. That is, there's seriously like 200 to 300 pips on each side of that. So a nice little holiday drift, could work out pretty nicely on the Aussie yen. Just set a couple chart alarms like I have here. Aussie New Zealand, we're currently short, and we're looking to stay short. I believe that the New Zealand dollar has rate decisions this week, or a rate decision. Forex Factory, is it Tuesday this week? Let's go to this week. RBA Governor Low, RBNZ, yep, so 8 p.m. Tuesday. 4.25%, which is a 75 basis points hike. We've seen a lot of the strength eating price in the last couple of weeks with the Kiwi. We've also seen a nice little uplift in China, which is helping the assets for the Aussie in New Zealand. So yeah, that hopefully is still favorable. I'm looking to following that direction with a nice high yield on the New Zealand dollar. I think that helps bring this Aussie New Zealand down lower. I'm interested in, we shorted this around 109.15. And we're up about 100 pips right now. I'm looking to see if this will flush down into 107 or lower, and then we'll start protecting some profit. Because we're up 100 pips, it's probably safe just to move the stop loss to, here's the deal. Move it to plus 5 or 10 and just walk away, right? Because if you're right and this pushes lower, enjoy those pips and turn on a trailing stop loss. If we're wrong and this wants to pop all the way back up to 110 or higher, it's not worth taking the risk. I'd say just lock it in. Okay, so we'll talk about that, in Tuesday's class. Aussie dollar, we pulled back to the weekly pivot. So if we have pullback and then another run up in this 200 EMA, I'm looking to see if that dollar will turn course, and the Aussie dollar can benefit from that. CAD Swiss, we're at 71.25. I'm still holding long for a little scalp, going after this level, holding this level, and trying to get back up to this weekly pivot. So right in here, that weekly pivot in this pocket on the CAD Swiss 72, 72.50, looking to the upside on that. Okay, Ethereum plunges 7% as FTX accounts. Here you go. Who was asking that question? McKinley. Ethereum plunges 7% as FTX accounts drainer dumps Ethereum for Bitcoin. So what did I do? I rolled all of my altcoins into Bitcoin. I rolled Ethereum into Bitcoin. I'm just saying, like, I think if anything, this is kind of putting more legitimacy and more kind of the one to rule them all to be Bitcoin, possibly, right? Again, still risk capital, but potentially asymmetrical. Okay, dollar yen just broke the range on the 4-hour. Yeah, but it just pulled back to the weekly pivot. I'm gonna look to see if we flush back down. And like I said, you want to be long. I mean, we talked about being long dollar yen last week, short term, and that hit the weekly pivot, so you could be long and trail. But I'm gonna look to see if the dollar gets weaker this week, and hopefully dollar weakness prevails with the holiday rally, and we'll see if the dollar weakness will at least flush down to fresh lows. All right, so CAD Swiss I'm long, CAD yen. Stay out of this one for right now. We're still sitting at the same level, right? We're still sitting right here. It's refusing to break these lows. There is a potential range trade here. Now, this is what I look for this week. If the CAD yen breaks above 106, we break above 106, I think we can go back up to 109 or 110. Now, is that CAD strength? I don't know. If it breaks down, we can still target this 200 EMA. We can still target this low. We still have, support like crazy, pockets galore. We could have, what is setting up to be a potentially massive falling wedge, or rising wedge rather, with a lot of room to drop. I don't know if there's going to be a catalyst for that, but again, we're not breaking lows. I can't jump in the sell trade yet. So back above 106, I would look for a long. Below a fresh low, I just target that 200, try to get risk eliminated very quickly and see if it wants to go lower. All right, that's CAD yen. Swiss yen, still sideways. I'm going to look to see if those break 143.50 and then continue to drop. Euro Aussie, Chop Suey, stay out of this one. Euro CAD, stay out. Euro Swiss, come on. Euro Swiss, hopefully we'll break this. Hopefully we'll see this action. If it comes down for a lower low, that's fine. We'll have some correction going on here. Shopify at 36. I think we took profit on that last week, but we'll keep an eye on everything. So opening bell going on right now, and we're going to see where the markets go. I'll see if I have some chart lines, some gaps. At last week in stocks and options, I ended up having 19 winners and 7 losers. So made some good profits last week. Also had a handful of stocks called away for profit. Not complaining about that at all. Euro pound, stay out of this one. Euro yen, range bound, stay out of that one. Euro New Zealand, I have been short. We shorted this around 69. And we're up a few pips. This was on a 4-hour time frame. We shorted around like 69 or 68 something. I can go to my other charts to find it, but we're up on this one for a few bucks. And there's a weekly pivot. We're trying to short this down into here. We're looking for if this will continue to flush a little bit lower. I think down to like the low sixes would be great. 6,100, 6,000 would be awesome. We're going to see if this is high to low, little consolidation, and then another break lower, favoring that Kiwi, favoring that uptick in the official cash rate. Euro dollar 102.50, similar, right? So we tapped the 200 EMA right here. Here's our weekly pivot. So we pull back to the weekly and then rally back up to this outer trend line that puts us at 105, 105.20. We'll see. What I'm hoping is not the case, is that was it, and this is just like bye-bye, back down to the lows. I hope that's not the case. So I'm looking to see if this weekly pivot, this little pullback, can still send the dollar with some weakness, which would send the euro dollar a little bit higher. Pound Aussie. If you have alignments here, I was looking to follow something like this. A little bit of consolidation. I was looking for a breakout to the upside, but it's kind of already started. I don't think I'm going to chase this one. I think I'm good just sitting on the sidelines on Pound Aussie. Pound CAD, we're trying to get this one to the upside towards 6,000. There's still room. I'm looking for dips to buy. Pound Swiss, I'm still long. I'd like to see it break the highs. Let me set a chart alarm here at 1577. See if we can break the highs. Pound yen, leave this one alone. Although, well, here's something to watch in the pound yen. Set a chart alarm in a trend line, because if we have high, low, lower high, lower low, lower high, lower low, there's some open space to the downside in the pound yen. But I would certainly look at trading this on a smaller time frame to get a little bit more precision. It's a pretty volatile pair. Pound New Zealand, I'm looking to see if this will break lower. Little consolidation right in here, lots of chop. So if we break lower on the positive Kiwi move, then that's a good little trade. If somehow they have a dovish hike, like maybe it goes the opposite, which is why we protect profit on the Aussie New Zealand just in case. But I'm going to look to see if there's follow through. Tesla 175, you son of a gun. Jeez, oh Pete's. Tesla's getting smoked. I think all this drama with Twitter right now and SpaceX, Alcoa's at 45. I need to get some of these covered. So I'm gonna start wrapping things up here. I need some covered calls to be added back in. I did not lose Alcoa at 49. I want to get back in for a covered call and try to grab some premium. So I'll do that ASAP. New Zealand CAD. I'm long in this one. If there is any pullback, so we just scored a point here. If we pull back into this 8,000 to 7,900 zone, if we have a pullback here, I'm still looking to get long New Zealand CAD. Okay. But this was our target that we've been in for a while. We were in here. We were in on this low right here. We were in this trend line break. Built a position up. I said my first target's right there at this high. Scored a point right there. So good profit protection on the New Zealand CAD. If you're long, it's time to get out. New Zealand Swiss. I'd also like to see if this one will hold and break higher. Get up to the highs, little carry trade, get to this 200 EMA. Nice structure, resistance back around 60.50 to 6,100. Trying to take some profit there on my longs. New Zealand yen. Resistance is 60 or 86. 86 right here. So previous highs, look for ejections at that 86.50 to 8,700 zone. Okay. Confirmation if you're going to sell it, though. Don't just sell it. We'll look for confirmation and trendline break. New Zealand dollar, we're going to pull back. So here's a 200 EMA that's pretty solid. Do we get a pullback towards the weekly pivot and then rally back up on a weaker dollar? Possibly. Challenge this high, challenge this high. I told traders last week we had a really good looking setup. If we pull back to 6,000, if we pull back to 6,000, which is right here just around this weekly pivot, look for a chance to buy on confirmation. So Masterflex is a really nice way to get that visual. We have a robot set up to do exactly that. Dollar CAD is also pulling back. Dollar Swiss, like I said, pulling back, took some profit this morning. Dollar yen pulling back or rejecting off the weekly pivot. Hopefully it will continue to reject and fall lower. And that'll wrap us up for today. Like I said, I'm going to jump right into the stocks and options portfolio, get some covered calls in for this week. It's time to do it today since I'm going to be traveling Wednesday, Thursday, Friday. Also, I'll be traveling on Monday. So I think all I'm going to be able to do on Monday would be a video. But again, I will still post a video. I might get it prepped on Sunday and just post it in the channel for this time. So look for that release. Same time on Monday. It just won't be a live Pulver report. It'll just be a video, but I'll post it at 9 a.m. Eastern time and business as usual next week once I get back. Okie dokie. All right. Thanks, Donna. Yeah, need more likes. Let's do it. We had 50, 60 people watching live. I know we typically get 500 or 600 views on this. So if you do me a favor, hit the thumbs up button, support the algorithm, all that good stuff. You know the deal. Just come in, click it. That's it. Right? Is that hard? One mouse click. That's all I ask. All right. If you're interested in TradingView, I shared the link. If you're interested in Masterflex, I shared the link. You can check it out in the chat above. And I know it's going to be a short trading week, but the market's still going to be on and open and still moving. So chart alarm set. Never a dull moment. Let's enjoy it. Okay. All right, everybody. I will see you in the trading room. Stocks and options equities on demand today at 10 o'clock. I'll see you in the next 30 minutes. Flex traders tomorrow. We'll talk Masterflex. We'll talk the system. We'll kind of dissect the deployments and runs that I did for the week. And that's an entire year trading on full auto that did 200%, which I'm super stoked with. And again, it's, I'm not bragging about the percentages because it's all trade size, but it's like trading a $5,000 account in micro lots and never running into margin management. It's pretty impressive in me. And that's all 28 pairs. I'm not cherry picking. I know there's some losses in here. In fact, this is what I like even more. This is crazy, right? Full auto with a 42% win rate, and we still made money. That is the beautiful thing about equity management, everybody. You trade to win bigger. So our let's see, drawdown. Let's see, winning, losing trade. So we actually lost more than we won, which I thought was interesting. Distribution-wise, this is how we make money. Our average winning trade was $25. Our average losing trade was 16. Okay, our average win to loss ratio was 1.51. Now there's a combination of 2 to 1s. There's a combination of trailing stop losses. Largest winning trade, 143 versus 123. So the edge goes in favor of our winners. When we win bigger, which is what allowed us to make money considering our win percentage was like 43%. So that's, again, proofs in the pudding. That's tick data. That's 11 months of trading, full auto on a 30-minute time frame on 28 currency pairs. Not a lot of systems I've ever traded and tested can do that. So it's pretty sweet. Good stuff. All right, everybody. Thanks for being with me today. I'll see you in the trading rooms. And if I don't see you in the trading rooms or I don't see you this week, have a happy holiday, happy Thanksgiving, all that good stuff. And I'll see you soon. All right, buddy. Thanks a lot. Bye.